Welcome to Framework Fortune. I'm your host Ben, and it's time for another one of Ben's stock reviews, the series where you leave a stock in the comments below and I'll do a review about it. If you're new to the channel, be sure to hit that subscribe button and the notification bell so you'll be notified when I drop brand new content to brighten your financial future. So today's stock is Zenabis, and this comes from subscriber Jason with an exclamation point. So Zenabis is ticker symbol ZBISF. This is another cannabis stock, so let's dive into it and see what it's all about. So here we are in Yahoo Finance. We're going to look at some numbers on this stock and see what's up with it. It's 11 cents right now. It is an OTC stock. Most OTC stocks are garbage, but the cannabis sector is a new sector, and these companies are not going to be IPOing straight into the NASDAQ or NYSE. So they got to start somewhere. I'm okay with cannabis stocks that are on the OTC markets. 40 million in market cap. Let's see. This stock has also dropped just like all the other cannabis stocks in the past year. Not anything surprising there. Negative 102% profit margin. I don't like that. Some negative numbers here on the return on assets and equity. Not a fan of that. 132 million in float. Not too big of a float, so the stock can move. Quarterly revenue growth, 235%. That's a pretty strong number, so I'm a little intrigued. Gross profit, 7.3 million. And then looks like total debt to equity, 87. And nothing else. Not a lot of information on Yahoo Finance, so let's jump into the website. And here we are, Zenabis. I think I'm saying the name right. If I'm not, correct me in the comments below, but cannabis, Zen, put it together, Zenabis, makes sense to me. So, aims to be one of the largest licensed producers of medical and recreational cannabis in the world. Aren't they all? And aiming, anybody can aim, I can aim. Right now, I'm aiming to be the largest licensed producer of medical and recreational cannabis in the world. I'm not, but I'm just saying anybody can say that. So, looks nice. Nice website, though. So, it looks like they have locations on both sides of Canada. We have a 25,000 square foot building, a 380,000 square foot building, 255,000 square foot building, and a 2 million square foot building in British Columbia. Wow. So that 2 million square foot building, that's a big building. And their portfolio, Zenabis, looks like Vita, Zencraft Grow, Namaste. Is that Namaste Technologies? I'm not sure about that. Blazery, Re-Up. Let's see what's happened in the latest news. So on their latest news, they're staying, even though they're OTC, they're staying pretty transparent. Keeping everybody updated on what's going on. Yeah, these are all really recent press releases, so that's a good thing to see that they're keeping people in the loop. They're purchasing pre-existing buildings. They strive to optimize production. Okay, very nice. They actually have their Twitter right here on the website. Well, I'm not seeing that on too many pot stock companies' websites. So that's pretty cool. They're staying in contact with their investors with Twitter, so that's really nice. Job postings, got all their information here. So overall, I'm extremely impressed with their website. Their website is really nice. One of the nicest websites out of any of the cannabis companies, and probably out of any OTC company there is, to be honest. So let's get into it. So the CEO, Kevin Koft. So he has over 30 years of international procurement, facility operations, and managerial experience covering regulatory, licensing, construction, strategic analyst, import-export operations, logistics, warehouse. Okay, he's got a lot of experience. We'll just say that. How about that? That sounds better. And see, he's held previous senior roles in IHL Group and Bilo Foods. Not familiar with either of those. Let's see, Mr. Bean. I don't know if this is Mr. Ben or Bean, but currently the general manager of Bevo Farms, the company's wholly owned subsidiary. So it looks like they've got a pretty good team here, pretty strong team. Let's take a little deeper look into their facilities. So this one here, the Zenabis Athelville, I'm not sure if I'm saying that right, but it's the largest indoor growing facility in Canada. It must be no, that's not the 2 million one. So that's the 380,000 square foot one. And here's Langley. Once this is fully converted, they're going to have a production capacity of 426,000 kilograms. One of the highest in the industry. That is the 2 million square foot building. Look at that. Just look how insane that is. That's a lot of pot. That is a lot of pot. Here's Vita. One of the largest cultivation facilities in the province. Okay. And the site allows for future additional expansion. So they're thinking about the future when they're making their investments and buying these buildings and lots and lands, whatever they're purchasing. They're making sure that there's room for expansion in the future. I like that. 800 kilograms currently is their capacity, and this is the Delta. One of only a handful of licensed facilities in the Greater Vancouver area. Okay, 25,000 square foot. Extraction design capacity 110,000 kilograms. See, this 800, this can't be right on this one here. This doesn't sound right, 800 kilograms. Because this is a 255,000 square foot facility only putting out 800 kilograms, and this is a 25,000 square foot facility putting out 110,000. So something's wrong somewhere between these two. I don't know, but that's a little weird. But whoever built the website, they could just hired somebody maybe off of Fiverr or something, and they just made a mistake, a misprint. So it is what it is. So let's look at some of these brands. Oh wow, this website is incredible. I am blown away by this website. Like, I wouldn't want to invest all my money in a company because of their website, but if a website was enough to get me, this one would do it. This is crazy. Look at this. These things interact with you actually clicking on them. So that's pretty cool. So it looks like they have their own little containers too. That's pretty cool. And there's just some prices and stuff of what they sell. Okay, so I don't think this is Namaste Technologies. I think this is one of their other brands. Okay, and all these want me to leave the website, so I'm not going to do all that. I don't want to leave the website. Oh, look at them. Look at them go. They got their competition on here. I've not seen that on too many cannabis company websites. They're not playing. So right here you can see the enterprise value and the current capacity of kilograms for several companies. You can see Cron's on there, Aurora, Aphria. So that's pretty cool that they did that. And then we got all this. So rights offering. Let's see, third quarter financial statements. Let's take a look here. As of September 30th, 2019, cash and cash equivalents, 27 million. Okay, so the total assets, 378 million, which is 200 million more than almost a year ago from September 30th. Let's see, their liabilities, 77 million. Oh, that was a year ago, so 219 million. Loans and borrowings, 50 million in loans, but they've got $378 million in assets. Let's see, let's look at some of these revenues here. It's like $12 million last year, and then the year before that, $3.5 million. So that's a big jump in growth. Yeah, you can see right here, 9 months end at September 30th, $3.5 million 2018, $48 million in 2019. They are ramping up. They are making some money for sure. And let's look at these operating expenses. So it looks like as much money as they're making, they're still not profiting because they're showing a $5 million loss on this financial statement. That's pretty much all I need to see on the website. The website's very nice. They are turning some numbers, but they're just spending too much. So let's look at it on a chart. Alright, so we're in Thinkorswim. We're going to take a look at Zenabis here. See, a year ago it was up to $3. Now it is way down here at 12 cents. So very, very cheap stock. The 200-day moving average is way up here at 65 cents. It's had a lot of selling off, just like all the other cannabis stocks, but it looks like it's kind of started rebounding a little bit here. I'd say, let's see, 11 cents, kind of where that little support was, 11, 12 cents. So I would say once this gets back above the 50-day, this actually would not be that bad of a buy. Maybe above 15 cents. I think if this got above 15 cents, I think you could see it start coming back up. They are making money. It doesn't look like they're going out of business or anything like that, or having any threats like Aurora is really. They do have some cash lying around, so that's a pretty strong thing. They're a little sketchy to me just because the fact that they're showing losses so far the past couple of years. I don't quite like that they're in that much debt and they're spending more than they're making. But yeah, other than their spending, I don't see too much wrong with this company. This is not a bad cannabis investment for a Canadian company. They're kind of flying under the radar as far as I'm concerned, because I've never heard of them until it was suggested, but they look pretty decent. If you're wanting a very cheap cannabis company to invest in, I mean, you're probably not going to find a company this cheap that has the potential this company has. Overall, it's a pretty decent cannabis investment if that's what you're looking for. I definitely think it's one that you could put on your watch list, and if it gets over that 15 cent mark, gets above this 50-day moving average here, you could see it climb up. I don't know how high it's going to get in say a year, but you know, if this company can tread water through these little rough patches that Canada's having, then this could be one that could pop out later in the future, or this could be a company that another company could buy. I could see a bigger company like Aurora or maybe Canopy Growth or somebody like that coming in and buying up this company. They've already got facilities in Canada. They have a 2 million square foot facility, which is a very big facility. So I think at this price, it's a pretty decent stock. Like I said, I would just wait till it gets over that 50-day moving average, so it shows a little strength, and maybe it'll start climbing back up. And who knows, you know, it could be a while before it gets up to $1, maybe $2, maybe a couple years before that happens. But you could see it from now go from 15 cents to maybe this summer around 40-50 cents. I think it's a decent investment. Now, with me saying that, be sure to do your own due diligence first before you invest in any stock. Just don't buy stocks because somebody tells you to. Of course, these stock review videos are for entertainment and informational purposes only, but I like it. It's not bad. If I miss something, if there's some type of press release that says this company is going broke or bankrupt or anything like that, that is something that's a good reason for this stock to crash, then let me know. But if it's just following the rest of the cannabis sector, especially the Canadian stocks, and it's just drop because of them dropping, then I see nothing really wrong with this company. So it's a pretty interesting stock, pretty good suggestion. Thank Jason again for that. Remember, if you want a stock reviewed, leave it in the comments below. I'm your host, Ben. You've been watching Framework Fortune.